It's another great day for gold, which is up almost 1%, closing in on those all-time highs. Now, part of the reason, or the main reason why gold is higher, is because the US dollar is lower. Now, it may not seem like that because the greenback is only trading lower against the Japanese yen. But for the most part, investors are still bearish US dollars, and they're also concerned about the ability for US equities to extend their gains beyond current levels. And so they're piling into the safety of gold. I've also talked about often how gold benefits from the beginning of a rate cut cycle. And, more so for the Fed and the other central banks, but the Swiss National Bank really kicked it off and put rate cuts on everyone's minds and put the focus on how quickly all of these central banks like the ECB could act. Speaking of the ECB and the euro is down quite a bit this morning after significantly softer than expected German retail sales. Consumer spending in Germany dropped for the fourth month in a row, and this decline in February was the largest drop this year. So the pressure is on for the ECB to move before the Federal Reserve. And the mere thought of interest rate cuts in general, I think, is propelling gold higher. Speaking of rate cuts, though, the Fed and expectations for the Fed cut seem to be pared back a bit after Fed President Waller said that he's in no rush to lower interest rates. So Fed fund futures have moved slightly more in favor of a July cut than a June cut, but there's still, a good chance of a June move. Now, U.S. data was better than expected, so that supported his comment, where we had upward revisions to the latest GDP numbers. Jobless claims also came in better. Since the last FOMC meeting, we've seen mostly better than expected U.S. data. So dollar bulls are not giving up. But dollar yen remains in intervention territory. Fiscal year ends in Japan is this weekend. So after that, the Bank of Japan may wait for the end of fiscal year end or, for the Easter holiday in the U.S. to come in with intervention. Now, it's not clear whether they're ready to do that yet because usually we hear some rate checking, but that is certainly a risk. And that is the reason why dollar yen hasn't really moved up to the upside off of these reports, although a little bit, because investors are still very much afraid of Japanese intervention, and they should be. We have holidays in the U.S. on Fridays. Not only U.S., it's UK, U.S., Australia, Eurozone. All have holidays. And so it was going to be a quiet day. We have personal income, personal spending numbers. We also have Japanese data dump on Thursday night. So we all have to be careful of that because that's going to be very important in light of the lower volatility environment. So there should be still some movements today, especially in the yen with the Japanese data tonight and the fiscal year ends coming up. But aside from that, the other pairs I think should be more consolidative. I won't be trading tomorrow. I don't advise you to either. I don't trade holidays. Otherwise, have a great weekend.